Welcome to Crypto Daily. My name is Dustin Knaus, and be sure to follow our show wherever you listen to podcasts. And leave a review on Apple Podcasts. Well, I need to talk about the elephant in the room. Last night, there was a drop in the market. Although this morning, as of this recording anyway, it seems to have stabilized. Now, this signals it may just be a correction from the all-time highs as opposed to starting a bear run. There's a lot of speculation about what may have caused this drop. Some believe it may be the SEC denying the spot Bitcoin ETF, which we discussed last week. Others think it may be because China has come out saying they're going to crack down even more on Bitcoin mining by increasing the cost of electricity on mining operations, especially those that are state backed in local municipalities. Because right now, they get the same electrical rates as consumers. So that's going to change soon. Now, that's part of China's initiative to cut down on carbon emissions, something that they desperately need. I've been to China several times, and I remember being in Beijing, and I could only see a couple of blocks down the street because of all the smog. Then one day while I was there, it rained, and I saw there were beautiful mountains all around me. I had been to Beijing several times and had no idea that there were mountains. But it's getting better there. It just has a long way to go. Anyway, back to the drop in prices. Like I said before, it could be a simple correction or just some minor sell offs. If so, this is the time to buy before the dip is over and prices start going back up. But honestly, only time will tell if that's the case. In other news, a crypto organization called Kraus House is planning to make changes to the sports world. Their goal is to sell a total of 1,200 crypto tokens, with profits being used to buy an NBA team. Each token holder would be able to vote to make decisions that affect the team, such as approving uniform changes or deciding who should be hired onto the team. The goal is to end the idea that a single billionaire owns a team and put the ownership into the hands of fans. The creator of Kraus House goes by the pseudonym Flex Chapman and was quoted saying, "It's the purest form of win-win that a league like the NBA can have, which has so much power and have done all the right things. This is the way to level up, where people can actually participate in the league that they've loved for decades." This is part of an ongoing movement called Decentralized Autonomous Organizations, or DAO. You may have seen in headlines recently about another DAO that is looking to raise $20 million to buy one of only 11 remaining copies of the original US Constitution. And that's going up for auction on November 18th. As of November 15th, the Constitution DAO was up to $4.5 million. And if they win the auction, each DAO member will gain fractional ownership over the document. Now, that gives them a say in where it will be stored and how it will be preserved. If they don't win the auction, then the users will get their Ethereum back. Well, in other news, as blockchain technology becomes more and more popular, we may be seeing some dirty play from corporations. Franklin Resources Incorporated is being accused of buying a blockchain startup, then dismantling it. What happened was Franklin took control over the startup Anza by investing in them and taking majority control. Anza developed a tokenized money market that converts assets into digital tokens, which was the first of its kind to be approved by the SEC. Suddenly, Franklin got rid of top executives and coders at the startup in 2020 and recruited some of them to start its own version of the blockchain technology, at least according to claims. Anza investors have filed a lawsuit against Franklin over the controversy. In the social media world, there's been a disturbing new trend that's happening. Two men in Tampa, Florida have had their Instagram accounts taken over by hackers, and their goal was to sell fake Bitcoin to their friends, family, and followers. Daniel Higgins and Christopher Cifuentes are ordinary men, not influencers. And they received messages from their friends after finding odd posts taking over their account. But they didn't just have typical images of cash like you might think. Higgins looked at his account to see a video of himself saying that he invested $300 into Bitcoin and got back $10,000. It was his face, his voice, but a video that he never created. Deep fake videos are getting more and more popular, which can make identifying hackers and scammers harder. They're essentially able to take advantage of the trust of your friends and family. So if you ever see anything odd on social media, be sure to check directly with the person. Well, now it's time to shift our focus over to the world of NFTs. Anytime something gets popular, we see traditional celebrities try to get involved and make some money. Now, I've seen an interesting trend in new media where the public just seems to reject it. We saw this with YouTube getting popular. I've seen it in podcasting where the biggest celebrity names tend to just fail. And now we're seeing a similar trend in NFTs. Although the NFTs can initially make the artist millions, the buyers are starting to get hurt by it. For example, the musician Grimes issued NFTs in February, which sold out. Well, some of them have dropped in value by as much as 84%. The majority of people who are buying celebrity NFTs are first-time buyers who really don't know the market and are inevitably losing money. We're seeing long-term investors just stay away from celebrity NFTs, which are being looked at as just a quick cash grab by big names. In other NFT news, Topps is releasing a new NFT collection based around the sci-fi trading card series from the 60s, Mars Attacks. I'm not gonna lie though, before reading about this, I thought Mars Attacks was just a film. Anyway, the cards were drawn by Norman Saunders and Wally Wood, and they tell a story about Martians who invade Earth, but the aliens are also ruled by a tyrannical government. The NFTs will be sold in packs and have a number of rarities. They're going to sell 564 yellow packs that cost $49 per pack, and each pack contains 11 cards. There will be 500 red packs that cost $99 per pack of 25 cards. And lastly, 150 green packs that cost $199 and contains a set of 55 cards. Some of these cards will also have redemption tickets that give away animated, gold, X-ray, and static bonus cards. There are 27,510 total cards in the entire Mars Attacks NFT collection. And that equates to about 500 full sets and 10 redemption tickets. Well, parents may have a new reason to be annoyed thanks to the NFT world. That's right, Baby Shark is now releasing a set of NFTs. Of course, this comes as the world of Baby Shark is only growing. There's an animated series on Nickelodeon, there's a movie in the works, and even a Baby Shark cereal. It only makes sense for them to aim their sights on NFTs. The collection is set to offer unique, one-of-a-kind, and limited edition pieces, which will show Baby Shark and his family in animations. It'll also have audio from the song. The collection is currently available to preview and will be available to buy on December 2nd at 3:30 p.m. Pacific Standard Time. Please follow our show wherever you listen to podcasts and leave a review on Apple Podcasts. If you get your podcast on YouTube, be sure to subscribe and leave a comment there. I'm Dustin Knaus, and thank you for joining me today.